Hey guys, so we're going to talk about CoinFLEX's new product, AMM Plus, which is an automated market making system we've just launched. And a bit about automated market makers. These are popularized by Uniswap, kind of invented by Uniswap, and also copied by SushiSwap, who've got an amazing similar product. And these products basically allow users to provide liquidity without building their own technology. So the activity is called market making. It's a very common activity going back recently in the decades of high frequency or algorithmic trading firms. But even hundreds or thousands of years, if you think about market making is just the act of buying and selling something and creating a market for people to trade any type of asset. So you think about port cities and marketplaces of all kinds. And basically, Uniswap created a tool, you can see it here in the Uniswap V3, that allows people to do this activity without having any technology, any experience, and a very, very simple, popularizing way to provide liquidity, to be a market maker. And in Uniswap's version, which has kind of become the de facto standard across DeFi, anyone who is providing liquidity is putting in two assets and is basically buying more of the asset as the asset goes down and selling out of the asset as it goes up. So if we put in ETH and USDC here, we put in 2,400 to 2,800 for ETH, we're basically going to be buying more Ethereum as the price goes down and selling out as the price goes up. Now, CoinFLEX has created an absolutely new upgrade to this model that is a merger of CeFi and DeFi. So we're taking this concept from DeFi and putting it into our perpetual futures contracts. So anyone can now stake any asset. So there's a bunch of coins you can stake. And you can also be leveraged. So you can be leveraged, you can have a lean towards buying or a lean towards selling something, or you can be doing both with neutral. And basically the end result is that people are very familiar with order books. The downside of DeFi's solution is that it doesn't create an order book. It creates something that's order book-like. If we go here, we can see Uniswap has something that's similar to an order book, but this is ultimately still something where you're trading on a blockchain at very slow speeds, and as volumes ramp up, the fees kind of really jack. So when you need it most, you have to pay a lot for the ability to trade on this. And so what perpetual futures contracts give you, and this is CoinFLEX's Ethereum market, and we've got perpetual futures contracts on a bunch of different things, is they give you really fast execution times. You just click, put in an order, and you can buy. They give you the ability to be done effectively on a price immediately and pay very little fees. So a small user might not be buying 1 ETH, they might be buying 0.01 ETH, and even though it's just $27 worth of Ethereum, they're still going to pay a very low percentage-based fees on that. So that's the advantage of a perpetual futures contract when compared to Ethereum. But the advantage here on our AMM is that you're trading against this market. So the people trading against you on the other side are the futures markets. And the futures markets are the biggest markets in crypto. Perpetuals and futures contracts trade way higher multiples of volume per day than spot. And so let's just show you an example of what it would be like setting that up. So let's do unleveraged, buy, ETH USD perp. We're going to put in $1,000, and we're going to set a price range of 2,400 to 2,600. And basically, once that goes in, a series of orders will get placed below the Ethereum price. And anytime you buy ETH perps with this AMM, you'll be selling out at a slightly higher price. And this is all done algorithmically, automatically while you sleep. You do have the risk of impermanent loss. So if ETH goes down to 2,400, you're going to own $1,000 of ETH at an average price of the difference between this and this. So $2,500 will be your average price, and you'll own $1,000 worth of ETH risk. And so this is really great for range-bound markets. So I'm just going to redeem that LP token and put it back to this sub-account. But this is really great for range-bound markets. So the end result is if you are looking to get a bit longer on a coin, buy more exposure to a coin, and you're happy to own something, then you could do the buy-only version of this product, and you could put in some dollars and you could use it that way. The other thing you can do, which many people have been doing so far, is they've been using an asset. Let's say they've got some Bitcoin Cash, and they want to use it to basically go long more Bitcoin Cash. So another thing you can do is use leverage, buy BCH, using BCH as collateral. So this is kind of interesting. This is something you can't do on any other automated market maker system. You can use BTC to buy BCH. You can use BCH to sell Ethereum. You can use Tether or USDC to do anything. And of course, you can use FlexCoin, our exchange's collateral token and fee token, to market make any perp in the system. And so so you could put in some BCH, let's say 1.5 BCH, and then you set a range, and you could even basically use BCH to market make BCH. And so that's what some people are doing. The other thing that's quite neat about this is the Tether to USDC perp is actually without impermanent loss, because as long as neither of those coins break the peg, it's a perfectly hedged instrument. And so this is something where, let's say you're looking to use Bitcoin and we offer very high leverage on Tether. So let's say you were to use Bitcoin to buy and sell the Tether USDC perp. You could plop in some Bitcoin and do a bunch of trading. And you can set a really tight range. So you could set it at 99.95, 100.05. So that's a 10 basis point range. And this kind of custom liquidity where you can set your own range and you can really pick the levels that you want is the best for maximizing capital efficiency. So we hear that talked about a lot in the DeFi space, where you want to be really efficient with your capital. Well, there's not a lot of ways to earn yield on BTC, for example. But if you're market making USDT, USDC in an automated way, you're going to basically be collecting rebates on every single trade. And as long as it's around the $1 price and you've got confidence in these two stable coins, it's a very easy way to just earn yield on any asset that's allowable as collateral. So, and we're going to be rolling out more collateral types. We're going to be rolling out more perp markets. And basically the gist of this is, if this works at scale, the end result is that we should be the most liquid derivatives exchange. And one question a lot of people might be asking is, why CoinFLEX? Can't any exchange do this? And well, really the answer is we have an integrated ecosystem where we have physical delivery. So unleveraged guys will never pay funding. We have FlexUSD. So if you are using leverage, you're going to pay the lowest funding rates in the entire crypto market, because FlexUSD provides liquidity into our funding markets. And we have these note tokens. So as more volume goes into these AMMs, as more arbitrage firms are taking from the AMMs, the returns on note tokens will actually jack up in a really, really big way. We're really excited about that. So CoinFLEX has been working on a lot of things. We've had a really busy year. All of them feed into our native Flex coin. And the goal here is create an integrated ecosystem where everything feeds into each other. And rather than something where the AMM creates activity in DeFi that doesn't feed into our futures market makers or our futures takers and futures volume creators, everything basically feeds into itself. And so that's what we've got going. That's what we're starting out here with this. And it's had a really transformative impact on some of our markets. The volumes of some of these perp markets have really gone up quite a bit. And that's what we're excited about. We want to see volumes jack from all the liquidity that this brings. And really, who is the person that's cut out for doing this? It's people that own a little bit of crypto or a little bit of fiat or a mixture of both and are willing to get more exposure or sell out of exposure. And so I think that's pretty much everyone on crypto Twitter, everyone on Telegram, because everyone's got some crypto, everyone wants to get more crypto, and everyone has a view. And this effectively allows you to get paid for having a view. So if you want to buy the dip on ETH, why go to an exchange where you just put in limit orders and you don't get paid to buy the dip? Come here, set a really tight range close to the price of Ethereum, and as the dip happens, you'll earn a bunch of yield in FlexCoin as that dip happens. So that's the powerful thing about this. It creates lots of demand from traders who have to buy Flex in order to pay these trading fees, and it also creates lots of liquidity on screen 24/7, day in, day out. Our thesis here really is that passive capital, passive investors, everyday people, and also funds that just aren't set up to trade algorithmically or in a high frequency market making style. Passive capital all wants to do the same things that active capital want to do, and actually that passive capital can do it oftentimes in a better, more consistent way if given the right tools. So that's where you come in. That's where we want you guys to get involved. Come to the CoinFLEX Telegram, ask us a bunch of questions. We're happy to answer them and happy to get you guys all involved. Thanks so much, guys.